Okay, so I would ask you to unmute. Okay, so I'm just, I hope you all hear me. I will go on. I was saying, okay, I was talking about my experience in IE Business School, where I learned what startups basically need in the very early stage when they start with an idea and want to go testing their product. That is where I started also to invest and to help very early stage startups to get to a seed funding round or to some sort of institutional investments. And this is what I want to talk about today. Basically, my idea was showing you a little bit my experience, or talking a little bit about my experience, what is needed for you to start a business once you have an idea and you want to make it happen. Okay, so the phase I'm working, my expertise, where my expertise is, the very early stage, when you start a business, is the hardest part, basically. Because especially when you're a first-time entrepreneur, you don't have credibility, you don't have network, you don't know where to start. In the 20th century, to talk in refer to what Rodolfo said, typically businesses were created by people who had money or had access to money. This is not the case today. I always tell my students and also the startups that there is a way to build up a business without having access to money. Okay, that's the big difference. And I agree with Rodolfo, things have changed. There's a lot of access to free technology. There's a lot of access to ways to test products and business ideas. So basically, everything starts with this book, Lean Startup, that is basically the Bible that we use in the university, and also I basically refer to when I talk to young entrepreneurs who want to start. And you don't need a lot of money. You basically need a process, and you need a good team. So I tell them, the first thing I tell them is, don't search for money, search for a good team, and follow the lean startup approach. Okay. Then they say, yeah, but I have to quit my job. I need money to live on. My teammates, they have a family. And so nowadays there's a lot of ways to get around that. I see a lot of people working part-time. I see a lot of people negotiating indemnification with the employer. I see public funding available for ideas in a very early stage. There's a lot of public funding for projects in the area of social impact or the development goals, the social development goals. Typically those funds, they give money without a proof of concept of the product. There's resources like Kickstarter. When you develop hardware, you can basically describe your product and search for funding on the basis of that, and develop the product once you have the funds and ship it to your clients. There's crowdfunding. But the most important thing for me is that you don't need a lot of money to get things tested. And that's the big new approach of the lean startup concept. Basically, go out, test, and come back, change, and test again. So basically the first step of the lean startup approach is then what they call customer development. And that's another big, very important book. It's called The 4 Steps to the Epiphany. Basically, that was a book Lean Startup was founded on. where they basically say, do customer development and not product development. Okay, so before that, or in the 20th century, people developed products and then pushed them into the market. They maybe did some research, they did some questionnaires, and to find out more or less what is the trend. Then they developed a product and then they pushed it into the market. Okay. The most important thing today is that you don't think in products you have to push into the market. You have to think in customers, a customer-centric approach. And you basically have to find out, you have an idea what your customer could be. And then you learn as much as possible about that customer and you develop a product that this customer needs. Okay. This is a very iterative process where you have to basically test always with the customers if your product is the right product, is fitting the market and the customers and the target groups. And it's a constant feedback process, just as Rodolfo described. Very flexible. You have to basically always be open-minded and be ready to correct whatever you had in mind before. And what they call pivot, basically make small changes or big changes once you get the feedback that what you're developing is not right. Okay, the next big thing you have to do is develop an MVP, a minimal viable product. This is a very broad concept, and people usually they get it mixed up with a prototype. Okay, the MVP is not a prototype. The MVP is a product, is a real product, and that's the hardest part usually of the life of a very a young startup, is developing this MVP and basically reducing the MVP to the minimum you need. And you have to be very, very strict in restraining your product to the minimum product necessary to basically deliver your value proposition. Your main value proposition has to be delivered by this product. And nowadays, for example, you can streamline and restrain it a lot. You can restrain it, for example, locally and say, I will only test it in this neighborhood. Or you can restrain it in different ways. You can say, I will only target it to this specific customer group at the moment, and then I open it up. Typical example is for when La Nevera Roja, which is more or less, was then bought by, I think by Just Eat at the end, a food delivery service here in Spain. When they started, for example, they restrained their minimal viable product to the neighborhood, to the student neighborhood of Moncloa, Argüelles, where a lot of students lived, and only offered a few restaurants in this area and only targeted their product to this group. This is a typical case of restraining your MVP, where you don't have to build up a big product that is serving the whole of Spain with all the restaurants you can imagine, and where you then produce a lot of frustration because people come in and see that there's only a few restaurants in their area, and then they leave your platform frustrated. So this is a very, very important moment where you have to develop, basically, you have to focus on your main value proposition and find out how you can develop something with little money and little time. And the most important thing, you need feedback processes within this product where you can learn about your customer, where you can basically see if your product is really fitting the market or not. Next thing I tell all the startups, don't spend time pitching to investors at that moment. Pitch, basically, you spend your time on pitching to, for example, clients. If you're a B2B model, then go pitching to clients and find real clients who want to test your product. Or go pitching to employees, key employees you need in your project that might work for free or that might work for equity. Convince them. Don't convince investors now. Pitch to relevant service providers you might have, to your lawyers, to maybe an agency that is developing technology for you. Pitch to them, convince them, and tell them that you will be a big company in 6 months. And if they work for you now for a little money or for free, then they basically create a great lead for the future and will be your service provider in the future. It is much better spent, your time is much better spent pitching to all these stakeholders than to investors, okay? Because pitching to investors will be as hard as pitching to those people or even harder. And then they will give you money when you really need clients, service providers, and teammates. So why would you spend your time pitching to investors? Next thing is, during the whole phase, just focus on one thing: producing relevant metrics. Okay, what is the relevant metrics? Basically, the ones that give you scientific proof of your product market fit. What is that? Basically, if you have a product, and if you have a new product idea, you might hunt metrics like, or you might try to produce metrics like registries or sales. All these metrics are not relevant because everybody can produce registries on the website or can produce sales, putting money in marketing channels like search engine marketing, Facebook marketing. Everybody can do that. It's a no-brainer. So for investors, it's not relevant. It's not relevant that you have 1,000 registered users, typically. Not relevant at all. So what is relevant is basically, you have to think like investors or like anybody who gives you money would think like, show me that your product is really wanted by your target group. Is really that the market really needs your product, wants your product, and that is something you have. And the most important thing is that they come back, that they recommend your product, come back, share the news, that your product goes viral. These are the metrics that you need to produce. Basically, typically it's recurring customers who are happy. It's valuations that you have on your page that show that people are really appreciating what you're delivering, your service. It's subscriptions, maybe people who want to go on using your service. It's the times people recommend your service. When you start, basically you start seeing that your product or your business idea has a product market fit when it goes viral somehow, when the user registrations and the user interaction starts to be exponential, okay? And that's the only thing you should focus on. Produce these metrics, and basically the MVP has to be built in a way that you only pursue, only basically chase these metrics to, once you have them, you can start searching for investors. What you have to do then, basically, is then you can go out pitching to investors. And what I would recommend always then is that's the time when you should look for a business angel, probably. Because a business angel in that stage can help you to build up a story. He knows the institutional investors, he knows what they are looking for, and he can step in, invest some money to basically keep you going through this time, because a seed investment is not built up in a few weeks. It takes some time. You can streamline your pitch. You can basically focus on the metrics and the story of your pitch deck. and the business angel will help you to find the right investors for your business. Okay, so that's my presentation for now, and I open up the round for questions. Miguel.
Thank you so much, Sascha. So let's do a short run now if someone has a question. Otherwise, we will leave it for the end. But if anyone has a question now, if I see any hands up. Okay, it seems there are no hands up now. So let's move to Andrew now. You have your second chance, Andrew.
Right, let's try that again. Let's hope that the reboot was the cause. Doesn't look like it, guys. Can you see my screen?
No.
It's asking me to quit. Ah. Okay, look, I'm just going to wing this and do this from a presentation standpoint,
Okay.
as the other guys have. So, a little bit of introduction. Firstly, thank you for inviting me, Miguel, to give a presentation. My name is Andrew Hughes. I'm a Brit, but living here in Madrid. I'm an entrepreneur first and foremost. 4 companies from growth to exit. The latter one being quite recently coming out in 2015, stepping down as CEO 2018, beginning of. So since then, I've been focusing entirely on accelerating companies that I've invested in, or helping founders get to MVP and beyond, raising money from myself, from my syndicate, or from my pool of investors. And this leads me to bring today some thoughts around innovation and funding in a time of crisis. But I believe there's a real opportunity right now, a real opportunity to grow. And this has really come from a whole bunch of questions and conversations I'm having with entrepreneurs of existing companies in various stages, with venture capitalists, with fellow angel investors, from here right the way through to Singapore. And I'm getting a really positive theme. So I wanted to bring today a strong positive message. I think we can all do with that. Don't blame me if it's wrong, but it's certainly something I'm trying to share. So positivity. And let's all start with that mindset. So innovation with impact and social good is something that I'm really beginning to see come to the fore. In the last 2-3 years, there's been a lot of talk around impact investment, impact projects. But I think one of the most positive things about this crisis is that we've seen this really accelerate. And the pandemic is sending shockwaves throughout the business world. But there are seismic shifts for the better of our communities that's happening right now. I think this approach is not only important, I think it simply must continue. And I think the significant increase in social impact and the outlook for taking responsibility, both individually and as corporations and as managers, indeed as entrepreneurs, I think is something that we should embrace. So social impact responsibility really is all about prioritizing doing good over profit. Not forgoing profit, but prioritizing. And we're seeing this currently with captains of industry right now, from McLaren to Tesla to Dyson. They're all turning their huge industrial might and power to aid the current situation. And I think this is really important for society to see. I think some of the disparity in wages and salaries of some of the FTSE 100 and SP 500 has been significant and not missed by general public. And I think this now is really starting to flow and ebb in the right way. And I think it's very important. And we see, companies pivoting all over the world to help others. Employers are also looking after their employees now, whether they are working or whether they are not, they're put on furlough. We've seen direct examples here in Spain with fellow members of GBO, but globally we are seeing this with my own family as well. We're seeing that the employers are really beginning to help, as are governments. And I think this collective crisis right now that everybody's sharing, whichever corner of the world, we're beginning to see this kind of approach. And I think it's long overdue in society. And this is the first part of innovation, which I wanted to talk about. But I do think opportunity is coming as well from all areas. And I just wanted to share a thought, actually. Innovation, if necessity is the mother of all innovation, I just have a thought that are we witnessing in history right now the end of cash? And this is an innovation arising from a defining moment in history. It's just a thought. I know we could discuss that, but we are being asked all the time now to only pay through contactless. And the governments and the banks have been trying to push this for quite some time. And I think it needed a catalyst. So maybe this is an innovation that they've been waiting for. So what is going on out there? Well, as I said, innovation is born of necessity. And technology doesn't stop evolving in a crisis. And in fact, it accelerates. As economies get upended, certain markets open up and grow. And for this, I'm thinking Internet of Things, AI, data research, blockchain, robotics. We've seen robots giving out medicine in hospitals in Asia. This is an incredible sight for humans to behold. And other technologies are all critical solutions right now. So beyond the immediate crisis, it is possible to see a continuation of the conditions that have served up into the startup world so well. We've had that for the last cycle of 13 years, and it's been incredible to watch and be part of the startup world and the evolution of entrepreneurs. So monetary authorities will keep the capital cheap and plentiful. They have no option. This is a strength for us. It's in a world as, we're going to be desperate for growth, basically. Investors will be dependent on finding the next promising startup, and startups will be desperate to find growth. Now, if I look at what's going on here in Spain particularly, I've been amazed to see how each country has done it. But let's keep it relevant to what the group is here in Spain. There's over 1,000 Spanish startups have joined the Stop Corona platform movement, which is basically a technology answer to correlate 1,000 companies to create data to fight COVID-19. I think it's incredible. There's also the Cube in Madrid with a hackathon of 6,000 people to help society during and post this crisis. And finally, we just heard from Sascha, and I think it's worth mentioning and congratulating Sascha for being part of a spearheading crowdfunding movement to bring ventilators from Spain. And I think it's over 80 right now, and I think that's an incredible achievement. And I just wanted to chapeau you for that moment. But innovation is about now. So why do entrepreneurs matter? Why are we all on this call? We're all business owners. We've all strived to do something special with our lives and build companies that are profitable and give back and employ people. And that's the important point. Startups are the #1 engine for job creation in modern economics. And I think that's an incredible statement. And that's why we're important. We have to survive. This is an unprecedented time for entrepreneurs. And I've been talking to a number, as I said at the top of the call, and they're all being impacted, in some more than others, some very severely, and some others not. But as business owners, we have to look after our customers and maintain their trust. This is paramount in this particular time. I've seen too many stories and read too many stories where customers are not put first, and they will be short-lived, these companies. As well as employees, we must remember our customers. You need to be willing to sacrifice the short-term profit and gains to protect our customers. We must also protect our employees. And the founders of some of today's largest companies did exactly that in the last financial crisis. So let's thrive. Innovation is emerging, sectors are thriving and providing opportunity in this crisis already, as they have done in other cycles, downward cycles. So entrepreneurs thrived and drove economies and recovery in the crisis of 1890s. the 1930s, 1970s oil crisis, Microsoft, 1990s, the dot-com, and 2008, the financial crisis. New and young firms are the main net job creators in the economy, and this is especially true during these recessions. Older firms are net job destroyers. The larger the enterprise, the more careful they have to be to reduce their costs. So even more so, entrepreneurs become the net job creators, and this is why we are important. Right now, I've lost count of the amount of investments that are still being made. It's incredible. And on the 3rd of April, Insight Partners, some of you might have seen this, announced a massive $9.5 billion growth equity fund. It was their 7th fund that they've raised. They've been going since 1995. And yes, they've probably been putting this together for many, many months, but they could have been shelved in the last 2-3 months in the first quarter of this year, but no. This fund is for A to E rounds, which is basically doubling down on existing companies that are proving they have an ability to create value right now. This is a massive statement. We don't know how long this crisis will last. We certainly don't know how the health crisis will last, but the economic crisis even longer. And this is the X factor that we really have to, as investors and entrepreneurs, try and factor in. But if we look at some of the companies that grew out of the last cycle of crisis, Airbnb, 2008, now worth 31 billion. WhatsApp, 2009, bought for $1 billion by Facebook. Instagram, 2010, bought for $1 billion by Facebook. Sorry, WhatsApp was 19 billion. Uber, 2009, 47 billion valuation. Probably less now, but still up there. Pinterest, Slack, Square, Stripe, Groupon, and my own company, Absorber Games. We all started around 2010, plus or minus 1 year. And each one of those has grown to great success. There is opportunity. And what are the advantages now compared to the 2008 crash? Well, there is an abundance of cheap government money. VC money is still available for proven tech. Tech since then, because of those companies I've just mentioned and others, is still a massively attractive investment. Success has proven the tech value over time. Tech barriers to entry are lower and cheaper. Sascha touched on that too. So the cloud versus the server infrastructure, much more economical for any startup to enter right now and challenge other businesses. There's a diverse seam of skilled and now remote talent. We built a company. I was a remote CEO. It was from day one to the day that we sold it and after. It is possible, especially now we are seeing this mindset change. There are multiple distribution channels that weren't there, options around that, and increasingly more cost effective as well. New models have arrived. SaaS and subscriptions have been very much taken over, incremental payments. And of course, crowdfunding options. They are all helping to bring advantages compared to the last cycle. So what sectors am I finding that are really important right now? It's key for us to try and look for the opportunity. There are going to be sectors, of course, that are getting crushed, no doubt about it. But we have to be agile. We have to be entrepreneurs about this. So during my conversations, these are the sectors that consistently come to mind, and I would agree. Healthcare, obviously, e-learning, social impact investments, children's content and education, remote learning, pharmaceuticals, biotechnology, food delivery, esports. Esports has grown 3,000% in the last 2 months. It's a phenomenon that's really taking over. There is no sports happening. So we're getting Formula One drivers racing on F1 virtual platforms against Joe Bloggs. This is a really interesting accelerator. This has been muted as an opportunity for 10 years. It's now actually happening. Gaming, very close to my heart in terms of business running. The numbers of games downloaded in the world today has been unprecedented. It is huge. The barrier to entry for gaming is quite low. Distribution is very expensive, but there is opportunity there. So we look at blockchain, electric vehicles, insight and research. The more we look at the impact around the cause and effects and the damage caused to brands or trust or governments, insight and research is booming. AI and deep tech. This will always be here, whether it be for smart railways or the military. And cybersecurity. We just had an update on this very platform. So these are the kind of areas that are receiving attention. Entrepreneurs are piling in. Some of them are quite, big barriers to entry, but others are not. And we are just one light bulb moment away, every single one of us, until we create the next company. So let's look at VCs. So I talked to North Zone, Hoxton Ventures, Holzbrick in Berlin, Kibo and Mundi here in Madrid, amongst a whole bunch of others from UK, Tel Aviv, Germany, France, and Singapore. And these investors are still investing, but they're saying to us, expect them to take longer to make a decision and probably crush the values. Companies with enough runway have an incredible opportunity to emerge stronger. This is how VCs see it. They are seeking capital efficient companies. Many companies will be able to become EBITDA positive, providing revenues are not extremely exposed. So we look at some e-commerce stuff, that's great, but if you're bricks and mortar, you're in trouble. And so M&A continues and will continue, again, albeit with impact on some valuations. But the key advice is keep developing, keep it lean, reduce the capital burn, reduce the investment requirements, which will help in your valuation as you come out. Be smart, pivot if necessary. Pivoting now could impress investors later. But it's not all good news. I just wanted to have a look at some of the figures compared now and the last 2008 crisis. So if we look at the Chinese VC deals now, they've contracted for the first 2 months 55%. If that happens globally, that's 28 billion in startup investment will go missing in 2020. The last recession dropped, the VC investment dropped, was 29% over 12 months, equivalent to 86.4 billion this year, if that extrapolates. So there is money being taken out of the system, but they are keeping their powder dry. They are taking that cash out. Interestingly, it took global VCs investments 3 years to recover since 2008. IPOs, they never recovered. They dropped 90% in the US on tech IPOs following the last recession. It's not recovered. There were 34 IPOs in 2019, 53% lower than 2007 with 76. So IPOs have taken a hit. But some VCs using the pandemic to rip up term sheets. I've seen extreme rewrites. I've seen slashed valuations, post-signature. This has never happened. Signature was sacrosanct in the VC world. Once you have that, you pretty much can go to the bank. Now that is changing. So there is some unscrupulous activity going on in the marketplace. That's through fear. But the message I think I have from everybody is do it now. The need for new jobs means the economy needs startups now. During the past 2 recessions, fewer dollars were invested, but more companies funded. Over half the Fortune 500 companies created during recession or bear market. That's incredible. Half the Fortune 500 companies were created in a recession or the bear market. There were 50 tech unicorns valuing 145 billion founded during the last recessions. Governments are helping founders. Denmark is covering 75% of salaries for companies that do not cut staff. Germany is offering 60% of new salaries for employees reduced from full-time to part-time. And UK is about to launch, I hear, what's called a fund, the Runway Fund, i.e. increasing the runway for startups to do it. The last piece of the jigsaw, by the way, that UK had not pledged support for. And bearing in mind, we are the backbone of any society and any economy, in terms of producing jobs. I think it was upside down, but governments are happy now. So in summary, it is dire. We can all see that. The world is turning to help each other like no other time in history. It's going to get worse before it gets better, but growth is all around us. New opportunities are abundant. Success comes from within. We are all in this together for the long haul. And I just want to finish off with one little quote, which I love, by Robert Strauss. It's tough out there, but success is like wrestling a gorilla. You don't quit when you're tired. You quit when the gorilla is tired. So let's not give up. Thank you.
Thank you very much, Andrew. Let's keep fighting until the gorilla is tired. Yeah.
Exactly.
So, any questions now? Any hands up for now, or shall we leave it to the last round? Okay, it doesn't seem to be any questions for now. So let's move.
I have a question.
Okay, Marcela.
Yeah, I'm still listening and trying to figure out the angle, so to speak, because I come from, I don't know, analog world. I don't know how to see where I'm a producer. So I produce commercials, short films, feature films, co-productions. I deal with film funds. We represent directors. Some have gone on to Oscar-winning directors. I've shot major high-profile brands like Mercedes, Citibank, blah, 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 blah. No, please, and I'm a mother of a 4-year-old. And so this, sorry about that. And obviously we're in a very interesting place. We do user-generated content now, directors at home using their family and directing. The stylist is, you know, through the mobile. So we're going through a phase now when our industry is going to change. But for example, a company like me, where I deal with talent and I deal with ideas and we bring them to life, how do you find or get in with like a VC company that can also help their clients at that stage where to communicate, or branded content, or, you know, yeah. I don't know if it makes sense, or you guys are in another planet, so to speak, money and you know.
If I might take that one, guys. You know, there are VCs for almost every sector, and each entrepreneur isn't going to be an expert on every sector. So you have to look at it from your perspective. Money raising as well can be either through angels, or it can be institutional VC money. So again, the audience that you might want would generally be known to you in a circle. So you could look at the centers, either, you know, Pinewood Studios area, for example. I know some finance guys around there, through to California, where of course Hollywood lives. So these, you generally go to the circles of which you probably find like-minded people who would understand your business, and that's critical. I think if you're going to try and raise money, you need to be talking to people who understand you and get you, and have got historical reference of investing in similar or like projects. One of the biggest mistakes is that you can go and pitch to absolutely everybody and the hope that a scattergun approach works. It doesn't. And you know, if someone's going to look at, you know, food tech or AI tech, you know, they're not necessarily going to look at UGC. But UGC is very important right now. User-generated content is very important right now. And there are very different ways to look at how you leverage content over different platforms. And that just takes a different approach and a different mindset, step back from the norm. This is what crises do. They make you think about what you're trying to do. How can you pivot? What is your asset? What is your vehicle? And try and leverage it. And then go and raise money. Say, no, we've got this new idea based on our experience here. But again, it depends on how much you're trying to raise. If you're trying to raise, you know, a couple of hundred, that's towards angels. If it's a couple of million, you know, you either need to know a lot of angels or you need to know a fund.
Thank you, Andrew.
Okay. Thank you. Thank you.
Thank you, Marcella, for your question.
Thanks, Marcelo.
Anyone else now, or shall we move forward?
May I ask something?
Sure, go ahead, Rolf.
Yeah, so sorry, my video is not working, so it's only showing my name.
No problem.
Okay, so I wanted to ask you, Andrew, if you want to start a manufacturing of a, let's say in my case, a building system, and you're looking for raising a very large amount. So everything I have read online when it comes to fundraising, it's like baby steps. You raise like some few, like maybe up to $1 million the first time, then maybe 10. So what happens if you need 150? How many steps?
150 million.
Yeah, how many steps do you think it will take?
That all depends on you know, as Sascha said, the MVP that you prove. It is about incremental steps, but you know, steps is either walking or running. Okay, so you know, steps can take less time. But in the rule of thumb, you know, investors, particularly now, are investing in more than MVPs. They are investing in proven track record. They're investing in at least 12 to 18 months revenue, and they won't typically look at anything before that. They've got to mitigate their risks too. Angels, therefore, are the precursor step for that. And interestingly, actually, there has been in the last 5 years a shift for VCs away from the lower seed rounds. A lot of VCs are chasing the bigger rounds because that's the way the tech cycle was going and the investment rounds were going. Just have a look at the stock market, you know, up until a few months ago. So you know, money talked, and big money talked louder. And they've rather left this kind of gap where, you know, as entrepreneurs with a bit of funds go in to step into that kind of that crevice, if you want. There are some VCs who are coming back down to that, but now that's been kind of thrown up in the air again. It's very difficult to get that kind of money without track record. If you have created a business and scaled it and sold it for a significant sum, and by that I mean at least 200 million, you probably won't get an audience if you're going to ask for that kind of large ticket to begin with. There are very few VCs out there that would even entertain that. Those days are largely gone. There are exceptions, of course there are exceptions, but you know, they usually come with okay, what have you done in the past? So Rolf, I don't know what you've done in the past. I'm not going to, this is just a vanilla response rather than response to your specifics.
Okay, thanks. Any countries which are, let's say, more prone to jump on production? Because I have seen that online there is many companies investing in tech companies, I mean online tech companies, more than physical production companies. So in your experience, are there any countries which are, let's say, more prone to invest in physical production and not only internet-based companies?
The reason why funding goes into internet-based companies is because they're highly scalable and much cheaper to scale. That's the reason. So conversely, you know, big industrial machinery or whatever is very difficult to scale. And if it costs that much to produce, what is the cost of sale? And you get into that kind of area. So is there a particular country? Yeah, the country where the business is. And that's the bottom line, right? So you probably won't get America funding a factory or machinery in, let's say, I don't know, Croatia. It's, you know, you've got to fit the pieces literally to get together. But I'm not an expert on that, but that will be my comment on that.
Okay, thanks.
Can I add a little thing to that?
Go ahead, Tapio.
Just because this might help. So maybe you're already aware that there's a relatively sort of major trend in the investment world at the moment, and it's growing nicely, and it's called prop tech. so property technology. And it's probably the only sort of forum where the VCs and investors actually are open to investing into something that's not just another SaaS company. So they have, I think, realized that there's major growth opportunities in the built environment, in the real world. So check out the PropTech kind of circles. I don't know where you're based, but there's now kind of PropTech groupings popping up almost everywhere.
Yeah, well, we are planning to have the manufacturer in the US and in Europe. First in US and later in Europe. Myself, I'm based in Spain and Norway, so I'm kind of alternating between.
What are you actually doing? Can you share?
Yeah, the building material which we want to bring to market is originally built. It was invented in 1965 in Norway, and it was my business partner who had a manual production from 1987 to the 2000s, and also in the US from 91 to 94. It's reinforced glass fiber elements which are built like Lego, and now we want to robotize the production to large scale to be able to produce between 5,000 and 25,000 housing units per year in each factory. So these structures which were built in Norway back in the days have had no need of refurbishing since they were built. So it's 1, 2, 3 lifetimes of strength in the building material with no need of refurbishing. And price-wise, it's competing with the concrete and wooden constructions and so on when it's large-scaled, when it's robotic. Now it has been only manual, and it has been built 200 projects since the start, and it has been a very expensive production, manually done, one project at a time. Apartment buildings.
Why VCs shy away from that? But Rolf, one of the good things about physical goods compared to technology is you can patent them. And the patents are
it is patented.
Yeah, I'm sure it is. And if you've got that, maybe VCs is not the right route. Maybe a strategic partner who needs another revenue stream, who's a big manufacturer, you can license this. And if you licensed it, you wouldn't need to kind of create that whole investment. God, I sound like Shark Tank now. Who's that guy in Shark Tank? You know, and they just get a royalty for every yard you sell or every brick that you sell.
Okay.
I was thinking exactly the same. If you're based in Spain, practically all the larger construction companies like Sacyr or Acciona or even developers like Merlin run various innovation programs where they're looking for exactly these kinds of things.
Yeah.
So try that channel because that might be much easier than a normal investor.
Yeah, and it's a very well-known model. You know, actually, particularly in Spain, a lot of the VCs in Madrid, are just doing property, right? They're doing bricks and mortar, and this has been part of the problem for tech. I mean, it is changing. So there might be at least connections through the Ferroval, kind of institute of technology that looks for not startups, but looks for corporate partners that bring innovation. That's the thing. If you've got something you can innovate an industry, a sector, physically, then it could be very powerful.
Yeah. Funny thing is that we have lived in Spain 4 years now, and I have visited all the major building companies on the Costa del Sol, where I live, and they are all building bricks and blocks. They're not interested in innovating. They want to keep low cost and safe. So here in Spain, no. Maybe up in Madrid would have been better chance.
Come to Madrid.
Yeah, exactly. Because here in Costa del Sol, actually we are going to move away from Costa del Sol. We're not going to continue living here because it's so slow. They tell me it's 20 years behind everything else. So we are fed up. We like the nice weather. It's okay. It's stable temperature, the best in Europe. But the business temperature is so slow. It feels like we have syrup on our shoes. So we're moving to Switzerland or something else, not Spain.
Rolf, can you hear me?
Yeah.
You should talk to Cosentino.
To?
Cosentino. Have a look at that. have a look at their site. Cosentino is a $1 billion company.
Yeah.
They're very specialized in new materials. They have a lot of patents, and they are very aggressive worldwide.
Yeah.
The company is called Cosentino, and they are in Almeria.
Uh-huh. Okay. Can you write it on the side on the chat?
Yeah.
Okay. Perfect.
Okay, thank you all. So I have a couple of people wanting to ask questions, but if you don't mind, I will give now the word to Guillermo so we can listen to his presentation, and then we'll run the last round of presentations. So Guillermo, you're up when you want.
Okay, can you hear me?
Yes.
Okay, fantastic. And I am now trying to upload my screen. Let's see if this works. I've got a couple of screens here. Okay.
I want to know how you did that.
Me neither. So yeah, I just had so many screens to choose from. But yeah, can you see the screen?
Yeah.
Yes, we can see it now.
Okay, Miguel, one question. How much time do you have so I can do it quicker or a bit?
15, 20 minutes if you could.
Okay, yeah, no, I'll try to keep it shorter than, yeah,
okay.
Around 15 minutes. Okay, thank you very much for having me here as a new member of GBO, and of course, having the opportunity to share what we do with and how I see the ecosystem now with these 3 guys that spoke before me that are really, really inspiring guys. So yeah, thank you very much. So I wanted to talk about, well, I am the CEO and founder of Fellow Funders. We are an equity crowdfunding platform. Actually, we don't use much that name now here among ourselves. We say investment platform because crowdfunding has always had this connotation, this of you know, analyzing some projects that no one else wants to analyze, or you know, the last resource projects go to ask for investment. So that's why I'd like to talk a little bit now about the investment process. How do we do it? We are a group of 25 people. We have already financed more than 10 million euros, which is a very humble amount, but well, it's not that humble if you see the size of the market here in Spain. And yeah, and to see how we keep the business going, even when we have in this crisis of coronavirus, and how many platforms like the large ones like Seeders, Crowdfunder, Syndicate Room, of course, Crowdcube, they have all continued business, mainly focusing, as Andrew was talking, on these sectors, opportunity sectors that we are now having, and people are seeing them more and more with better eyes, because don't forget that now more than ever, investors they also want to help. So it's social investing, it's taking a larger step, and we are also in Fellow Funders focusing on this kind of investments, because we have some that could be very interesting. So talking about the process, let's see if this works. Okay, yeah. Can you see my screen moving?
Yes, we can. Yes,
okay.
Go ahead.
Okay, yeah. Fantastic. Okay, so yeah, let's say we are a group of almost 30 people, and we have more than 12 people on the investment part of the analysis. Let's better say analysis team, which so we think that our process or our due diligence has to be really, really intense. Even we try to do the same way in a smaller, but as a VC, because I think it's the only way we can bring investors confidence to invest on these earlier stage companies. Okay, so early, and we focus mainly on earlier stage and sometimes later stage. We don't do any seed investment, okay, because that's too risky. We leave that for family to triple F mainly. Another maybe even some business angels that want to go into those stages. Okay, so talking about the steps of the process. I think the first thing we do on the analysis is we receive many investment proposals, opportunities, startups. Some of them is push, so they just come to our online website and they propose there, and some others which have a much better probability ratio of passing our due diligence are the ones we go to them and we tell them who we are and what we want to do for them and with them. Okay, so we get the proposals, we do the study and of the evaluation and the feasibility of the company, and also of the investment proposals. Secondly, and in a resume way, summarizing a lot, we do the launching of the campaign. Here is when the sales department and when the marketing department start working hardly, and we propose it to the investors, and then it comes to execution. How do we close the deals? We formalize the deal, the investment, but very importantly, we also do something that many people think these platforms don't do. It's the monitoring the investments. I have been the last 2 weeks working home almost every day. Why? Because I've been doing all the contingency analyzing, asking for and helping to all my companies, the companies that have been financed by us, doing the contingency plans, okay, and helping them. Some of them are struggling a lot, really a lot, but others are finding chances to succeed among these very down markets, okay? So how is the steps of the process and how is our funnel? Okay, we receive more than, generally speaking, we can receive more than 800 investment opportunities to choose in the end one of them. That is being said, we don't receive 800. We have 7 independent partners and sources that help us do the funnel, filter, and do the previous screening. On the second part, we use an internal scoring tool, which we call the scoring, which is doing the risk on 6 main points of the opportunity, and that's the team, scalability, timing, market, advantages and competence, and business model and exit. Those are the main 6 areas we analyze. So there are more than 60 points here, and if one of these 60 points we have a red flag, so we punctuate it below 5, or it's something that it doesn't compete with, apply, we just directly discard the opportunity and we go to another one, okay? Or we wait for this part to be solved, okay? Which is here, yeah, called the critical paths. And then we go on to the quantitative evaluation. We've been pioneers in Spain, and we've been only here since 2016. So there were many other platforms before us doing the quantitative analysis. And that is, we said that valuation matters, and it matters a lot, even in the first investment rounds. Something which was not so important. It doesn't matter if your company is valued 1.2 or 1.3 million. It doesn't matter, because then if you really scale, you're going to value 100 and nobody will care. No, that's a big mistake. Something we've seen, because it's not about thinking about exit. It's thinking about the next financing round, and that's where you have to prove you've done your business plan, and your evaluation is supposedly has to go up, and that's the key part. Okay, so on the analysis side, going more into a deep let's see, on the analysis part, we have the scoring. As I was telling you, this scoring is composed that you have to at least achieve 65 points out of 100. We've got these 6 main parameters that I've been telling you, and we don't allow critical paths, okay? And then that's the thing I was telling you, we go on to the evaluation, okay? We've developed our own quantitative model based on simulations. We've got an expert on the team on this side. So we, of course, we give a range. We don't give just one amount, one valuation. We offer a range, Important here that we've been doing things, I think, quite well with this, our valuation expert and his team, that we've even got some VCs asking us to help them do independent valuation for them, you know, with not just not using our name, just, okay, when we have this, or we are trying to invest on this, or we have these opportunities in our fund, and we need you every year to do the independent valuation. And this is something we are being asked for now these days on one of the other business areas we do with my company. Okay, so here, how do we do the bottom-up selection on this analysis? It's very important. So first, we get the part of the analysis team that focuses on the business model and the processes. So this is just, we need to see an investment deck. It's quite easy. And once we see that, we have a meeting the investment team has a meeting every Friday, and they see if we think it has a sense going forward with this project for us and for the type of investors we have on the platform, which is a wide variety, mixed, but that's what they decided. Secondly, then we go to the risks and the leverage. So we have an expert on risks. Many of us have been working for the bank and on the capital markets, on the treasury departments. So here we have an expert on risks, and he goes and he really analyzes all the P&L of these companies, the balance, everything, the leverage they might have. And then afterward, to end this bottom-up selection, we go and we do the final price evaluation, and we analyze the main KPIs. Okay, this is some part of the minimum parameters I was telling you. You don't have to comply with all, but I would say 80% of them you should. Okay, we've got some flexibility when it comes to business models that have patents, of course. That's another kind of course, biotech projects, they have another maybe maturity and other kind of investment rounds. So we are flexible on that. We have many experts helping us on each sector, because we are not experts, we are generalists, as to say, and we have experts helping us on this. We have, for instance, possible project that has to do with e-games or gaming. Gaming is such a complicated world. Then we go to an expert and help there and seek for their help and their advice. Okay. Okay, on the investment. So you see how we want to be transparent, and I think this is how it should be. I mean, I'm talking about me because I know the experience of what we do in fellow funders. We offer all the investors, we offer of course, the business model, executive summary, but we offer them evaluation research done by us, not by the company, okay, which is very important. And it's also something that wasn't done before. We offer the shareholders agreement. We show it even from the beginning to the new possible shareholders, so they see where they're going to invest, and they can read everything, all the tag along, drag along, everything that it has to do with them, because it could arrive the case that they get an exit and they don't have any profitability, and that has happened a lot. Well, quite a few times. So we cannot afford that. Okay, so. And on the investment side, this is something we like to say we offer to investors. Okay, so I think we have a very high quality of deal flow. Okay, we are young, but I think for the instance, we've financed 26 startups. Only one has died. And yeah, I know we haven't had any exit yet, but we're looking to one of them soon. Maybe not this year after what has happened, but for next year. Okay, we try to reduce the possibility of default with these models I was telling you. We monitor all the projects, and especially on the financial side, because we are experts on that. So I think when a startup gets this first non-triple F round, they need to have an expert on the legal side or on the financial side, and normally they don't have an advice on that part because they don't think it's so important at this moment, and when they realize it's too late. Okay. Yeah, we also monitor the business models, and when it comes to the investment, yeah, we do we work with a payments institution, so there's no risk on that. So the money is always safe in a wallet or escrow account, and the money it's never touched by any of us, because it might sound remote, but just recently, 2 months ago, there were 2 investment platforms on the lending side in Estonia that, yeah, kind of ripped off their clients, and the money of many investors disappeared. So yeah, it's incredible, but it can still happen. We know in Spain, every country is different. In Europe, I think in Europe, it's only 12 countries that have a specific regulation on investment online with platforms, regulated platforms. So yeah, but that's the situation right now. And then, yeah, well, once the project has finished its funding campaign, we release the funds, as I was telling you, and then and when we do all the legal stuff we need to do, and we help also on the investment certificates for the investors, and we have an investors meeting room, let's say, open forever for them, only for the investors that actually have invested on every opportunity. So they can ask and always contact the promoter team and the entrepreneurs team. Okay. And this is mainly what I wanted to tell you. I don't want to go too deep into this. I just want to give you a brief talk about this kind of investment opportunities, investment vehicles, or let's say that allow you to invest ad hoc. You can choose. You can do your own analysis should you want to. Okay. Of course, I'd like it to get one day that my investors, they invest and they diversify their portfolio, just knowing that these projects have undergone all of our scoring and risks processes. But hopefully that will come with time. And for the time being, we have over 12,000 investors, mainly small investors, but we have some high net worth individuals and also recurrent, I would say, credited investors that invest always over 3,000 euros in each investment. And of course, some large tickets. Today I was talking with an investor that he was willing to invest 100K in a project. Okay, but and those are coming in like in water drops, that they will come, because people is looking at the necessity of this kind of investments, and also, as we were telling at the beginning, they want to go to on the social and investment, social investment. So that's something I think will help us to make this come through. Miguel, and that is mainly what I wanted to say. I don't know if there is any questions.
Thank you, Guillermo.
You're welcome.
I think we will now start the round of questions and answers. So everyone can ask to any of you personally, or just to all of you, and you guys just choose to answer. So let's start with Luisa, who was waiting for a question. So Luisa, you're up.
Yeah, thank you very much, Miguel Angel. I have a couple of questions for Sascha. Sascha, first of all, well, thank you for the insightful speech, and then also congratulations, because I saw this morning that all you've done with the ventilators. My questions are two. So, based on your experience, what would you say is your key learning that we are not going to find in this Lean Startup book? What would you say is your key learning after following your experience? And the second is, based on the current environment, do you think that is going to be would you say is going to be anything different from the process so far, from your experience building startups, moving forward?
Hello, Luisa. Sorry, the second question is about the...
The second is more moving forward. If you think anything is gonna change dramatically from the process of building startups. I've understood that you believe on processes, so processes and metrics, not only on the ideas, but really to implement ideas.
Okay.
So that moving forward, do you think is anything gonna change dramatically from this process?
So yeah, to answer the second question first, lean startup, or the way we all build startups today. I mean, lean startup is more like it's like a mainstream today. I believe in process, and I believe also in that founders should learn something before they start founding, and they should learn from other startups, and they should read these books. They should go to university and learn some theory. Myself, I'm a self-made entrepreneur. I learned some things before. I had some experiences, but basically never read Lean Startup, and just did it that way more or less because of the necessity. Talking about what changes with coronavirus is exactly that. We will have less resources, less time to build up our companies, and you have to be more flexible. You will have more uncertainties, and that basically speaks for this kind of approach. This kind of approach is using less resources and less time to get faster to a product that the market needs. Okay, so in this case, I don't think that the coronavirus or any other crisis will change this way to work. I think even it will strengthen this kind of working. I also agree with Rodolfo and also with Andrew that basically coronavirus is a situation where startups are needed more than ever. Okay, so you need rapid response, you need fast development, you need agile methodologies to respond to these kind of unknown black swans that come along. Right? Nobody has thought about them. Nobody has ever tried to. There's no hardly any experience on any of that. So basically, what we need is startup thinking here.
Sure,
because,
sure.
Yeah. In any way. You were mentioning this project that we're doing now. I would like to send you a small invitation to donate if you want to, and give you some additional information after this, maybe via chat. What we've seen here is that governments and institutions and corporates are not able to respond to the needs, to the most urgent needs in the national health system that we have in Spain right now. Governments are not prepared, their processes are not prepared, and even foundations, very big foundations, are not prepared to respond fast and agile to this situation. And that's the time of entrepreneurs. That's why we saw our opportunity to, as entrepreneurs, to help in a situation where governments cannot help. Because, so I think it's more than ever the time of entrepreneurs, the time of startups, and we need them more than ever, and we need this kind of thinking more than ever.
And maybe from now on we will need also innovation in governance to do so, because
yes,
boundaries,
there must be more
the concept of boundary is a little bit innovation.
If I could just say that entrepreneurs have never relied on government.
Yeah, this is.
Governments are in the way. They are not agile. They are not innovative. They are self-serving. And entrepreneurs are exactly the opposite.
Yeah, this is.
And we fly and thrive on opportunity. And where there is crisis, there's also opportunity, as I was saying.
Yeah, absolutely.
And entrepreneurs, you can be a first-time person with one idea, or you can be a serial entrepreneur, like Sascha and myself, and Rodolfo. You know, we've done this. We've done it many times. It doesn't get any easier. I don't think there's even that much more risk now for starting a company, providing you understand what you're doing and providing you are going into a sector that isn't critically crushed by what's going on. And there are sectors around that. You know, actually, if you look at the risk for this current crisis, it doesn't really impact a pre-seed startup pretty much at all. The only X factor that does change with a crisis is the X factor of time. So that is about how much runway you've got, how much money you've raised or can raise to, because nobody knows how long this crisis of economy, not just the health, will last. And that's the only factor that changes whether you succeed or not in real comparisons to crisis or non-crisis time.
Mm-hmm. Thank you both. Yeah, fully agree. Thank you.
Thank you all. So I have 4 hands in the pipeline. The first one is Gianni from the beautiful Stockholm. So let's fly to Stockholm now. You're up.
Hello guys, how are you guys doing? I'm sorry I joined a little bit late. Sweden is, you know, obviously a little bit different than other countries. I was coaching my daughter's football team. I came in late. Life is very strange here compared to, I guess, the rest of Europe. Anyway, Guillermo was mentioning that there was like, I guess in the beginning you guys talked about social investing. I'm not sure if I'm repeating something that's all been said, but my question is like, because this kind of topic that we're talking about is a little bit foreign to me, but I would just want to know the value of values, basically. Now that there's a new narrative, there's a new story that needs to be told, we need to think differently about making decisions. We need to like think about, maybe have different dimensions in when we're making business decisions. Do investment companies, VCs and angels, do they have like values set in place for them, and then they choose to invest in companies that reflect their values? Or how does this work? Is there anyone who can answer this? Maybe it's a general question to all of you who deal with this, but is there like we have values and then the companies we choose to invest in, then we look at the values that they stand for, or is it just like that doesn't even factor in? I guess anybody can answer this question.
I co-invest with some impact investment VCs, so I've got some visibility. In particular, IV UK, which is Impact Investment UK, part of the European VC network. And the word impact is with a small I, right? Impact for one person is very subjective. For one VC is very subjective. But what the common theme is that there must be social good, as well as a good, strong business model. So, for example, farm drop, direct from farmers to consumers, is considered an impact investment. A physical good, which is a breast pump for lactating mothers, to be able to do that whilst they're working in government or in shops or in corporations, they consider that a huge social impact for women. So impact investing is a broad topic. And then you have also the amount of impact investment you do from the fund. Is it the 80-20 rule? Does your fund invest 80% of its funds in impact and 20% in non-impact? And therefore, do they classify as impact investing? And conversely, if the company is 80% model non-impact, but 20% of the model is impact, does that qualify for impact investing? And those are the kind of discussions around this new trend. Let's not call it a trend, it's a new movement.
It's a new narrative, yeah.
And this is what we're finding. And if I look at some of my investments, it's probably 90-10% are impact in companies that are probably 50-50 in terms of impact. about how to
okay.
do that.
Thanks for that, Andrew. I guess the reason why I'm also asking is because we work with this concept. I don't know if you guys have been on the other calls with me, but talking about gross national happiness, which comes from the Bhutan, where you talk about different dimensions. You talk about the decisions need to be based on like psychological well-being, health, time use, education, diversity, good governance, community vitality, ecological diversity, and these more like decisions need to consider these a broader spectrum of choices now. And I was saying like this might be more and more relevant now as companies realize that even investors will be looking to invest in other companies that have this sort of a broader societal that you just don't look at the triple bottom line. You look at more factors that are
I think it's very right, and it's very true. There is a definite movement from C-level listed companies to push down to hear what their customers are thinking. What is the impact of their brand on their life? So there is a microcosm of impact, and then there is, do you care whether we are carbon neutral by 2020 or whatever? These discussions are becoming far more powerful because the millennials and such, they are incredibly powerful group of people.
Yeah.
And the Z generation coming up behind them, they care. They really care. It's their
they really care.
Right?
Yeah.
And so it's really interesting that whether it's right that corporates follow that because it kind of pays lip service to it, or whether that actually does, the tail wags the dog, or the dog is actually wagging its tail, i.e. they really do care because they bloody well have to. And this is one of the things that I think is really important about impact and impact strategies around businesses, and strategies will attract investment strategies too. So
exactly.
Exactly.
It's about branding also. It's like people, so even if they do it for the wrong reason, so to speak, it's still doing something. So it's better than not doing it. So I'm like, it's a win-win scenario anyways.
But actually what happens through that cycle is that they go, the C-levels go, hey, this actually does.
Makes financial sense. Yeah.
So let's get an impact strategist in on the board, and this is what's happening. So then it really does become a powerful movement.
Wonderful. Thank you, Andrew.
Okay, cool.
Thank you, Johnny. So now, Andrew, your hand's up, but I don't know if you wanted to add something.
Well, Guillermo, yes, good to see you. Good to meet. I just wanted to just kind of ask about the range of ticket sizes that you end up investing into the companies.
Okay. And you refer us from our own tickets, the team tickets on the platform?
The platform.
Yeah, well, small tickets from 1K to 50K.
Okay.
So yeah, it's always good to say that you have to prove it, that we put your money where your mouth is. But yeah, the reality is that when you don't have much cash, you put small tickets, 3K, but we have invested on 2 of the projects. We have invested 50K. So yeah, it depends, but also ourselves, the business owners and our families, they normally support also. So in general, let's say we've got between 10K and 100K in each investment opportunity we launch.
Thank you. So now it's time for Tim. Tim, you're up. Tim?
Hi, can you?
No, I think you're muted. You're still muted, Tim. Let me. You're muted. I'm trying to unmute you right now. Yeah.
Is that better?
Go ahead. Yeah,
can you hear me?
Go ahead. Yes.
Hi, everyone. Thank you very much for your insights. I just wanted to pick up on a point that Sascha made about the importance of a customer-centric approach, and as opposed to a product-centric approach. And for me, a customer-centric approach means focusing on the customer's pain points, really targeting those pain points and researching them in detail. And there's obviously various ways that you can do that through focus groups, surveys, and so forth. But sometimes these techniques, there's occasionally a risk of missing some hidden pain points. And I was just wondering if you guys had some insights on any other techniques or what techniques that you use to zone in on those pain points and in volume in order to be able to create your MVPs.
Okay. There's a lot of, as you said, a lot of ways of talking to the customer and basically trying to find out, to put yourself in his shoes, and you can make a lot of mistakes. Yeah. I mean, if you have done a focus group once, then you know that people tend to say what you want to listen and things like that. So surveys like, would you be interested in a product that does this and that? Yeah, typically come out with 90% say yes. Okay, this is not a valid customer development. Okay, because everybody would say yes if you suggest, yeah, maybe I would. So and the next thing you have to do is saying, would you be willing to pay for it? And then you have to check if they really want to pay for it. So nowadays there's so many ways to build up basically a facade of what your service is supposed to be, yeah, so that the user doesn't see that behind that there's only manual work and people working on the whatever with the phone and stuff like that. But the facade looks really, really nice. There's a lot of tools like that, and you can test how they really would interact with the product. Okay, that's the main point I would make there. Customer development is constant, basically constant confrontation of the customer with your value proposal that you have, yeah, the real value proposal, and see how they interact. If they really want it, if they really think that this solves their problem, as you said, that this really addresses their pain points. Yeah? But it's not about having a nice talk on the table and then say, I'm developing this kind of product. Do you think you would like it? And everybody says yes.
What about
this doesn't mean that interviews with these people, whatever customers you have, if it's a B2B customer, of course, you would talk to the companies you're targeting, but also if you have B2C customers, then trying to find out who are the real early adopters of your product, the people who basically have the biggest pain, who have the biggest need for your service. Talking to them personally helps a lot. Yeah, it helps a lot because you always have a view on your own company, your own product that is completely tunneled. Yeah, because you fall in love with your product, you fall in love with your idea, and talking to people and trying to find out what their real problems are is necessary.
Yeah. What about the ideation stage, those very initial stages where you're trying to find problems that you're best placed to solve?
You mean what kind of techniques you can?
In terms of those very early stages when you're starting to think about what possible target groups, what is the thing that they're most struggling with, and trying to match that to where you're best placed to create value in that space. Do you have any kind of thoughts on?
Basically looking around where things are missing, where things are not digitalized. Okay. Typically, we VCs and business angels are in the digital space, as Andrew said, because this is the most scalable place. Yeah? Because not every company is a startup. Yeah? That's it. Not every company needs VC funding, because startups are companies that grow fast, that can be completely scalable, and the value of the company can explode exponentially. That's a startup. Everything else is might be a very good company, very profitable, but not suitable for VC investment. Okay, so basically you have to look around and see where which spaces are not very digitalized. Okay, and then you try to find out where are the pain points there. Where could you add a lot of value with digitalization? And it's crazy that we live in this digitalized world, but there's whole spaces of areas of business that are not digitalized at all. Yeah, and you only have to think about what could you do, how could you innovate there. Yeah.
Interesting. Okay, thank you very much.
Thank you, Tim and Sascha.
I just add something to that, to Tim's point.
Sure.
Sascha's
Go ahead.
Response. Very briefly, that actually you don't even have to have a new idea. Most ideas are new. They just, you find that something you really value, and you say, I can do that better. And that's good enough. You don't have to kind of reinvent the whole wheel.
Thank you for that, Andrew. I had Oscar, but now the hand is down, so I'm not sure if you want to go ahead, Oscar.
No, that's fine. Actually, part of most of my question was already answered by the previous discussion, so that's why I lowered it down.
Okay.
Yeah.
Okay, so anything else, guys? Any more questions? Hands up, or just unmute yourself and go ahead. So there seems that no more questions. So I would like to thank you, Sascha, Guillermo, Andrew, and Rodolfo, for taking the time to prepare the speeches and for sharing the presentations with us. It has been really inspiring. And thank you everyone else for coming, both members and guests. And I really hope to see you around soon. So I will just activate everyone now to say goodbye. Thank you all.
Thank you very much, Miguel Angel, for having us, hosting us.
My pleasure.
Thank you, everybody.
Thank you.
Thank you very much.
Thank you, everybody.
Thank you, everyone. It's been
Thank
brilliant.
you, everybody.
Thanks a lot. Bye.
Thank you very much. Bye-bye now.
Thank you.
Thank you. Stay safe.
Bye.
Bye.
If anybody wants
Stay
my
safe.
presentation, let me know.
Thank you.
Stay healthy.
I will, Andrew, I will.
Okay. No, I'll give it to you. Thanks.
Thank you. Thank you.
Bye-bye, everybody. Thank
Bye.
you.
Thank you, guys.